What is going on, guys? Welcome back to another video here, breaking down the DTG system last week and looking at some of the positions taken that you could potentially be a part of if you come and join us here in the DTG Academy and plug in my trading system and start looking at setups just like these ones. So just a quick overview. I'm not going to go too much into detail because it will take a very long time. I did record a full breakdown of all these setups for the Discord, which was over an hour long. Breaking down every single level, every single entry, and different ways to enter the trades, manage the trades, and find direction, whatever. So with the DTG system, step one is finding direction. Okay, and step two is then building confluence in that direction, and then step three is executing on that analysis. And basically here on Monday, what we had was this was the market open, this yellow line down that you can see. I should probably change that to I don't know, something else, maybe just a nice bluish color. But this was market open. And basically what happened here on Monday is we come down, we retraced into the DF. Right now, I'm not going to explain these levels too much. All the levels that you're seeing on the chart right here, these are our levels of interest where we're looking for price to interact with, and then look for positions from there, as you can see. But DF, we got DF, TF, FF, DTF, and so on. And these levels, as you can see, green, we're looking for buy positions from these retracement levels. And as we can see right here on Monday, we got this beautiful 30-minute AY break and tap. This is one of the DTG entry models. There is 3 entry models: AY break and tap. These ones here signals, and we'll get to those shortly. But there is AY break and tap, one entry. Signals is another entry model, as you can see right here, signal, and IBO, which is intraday breakout, which is another setup entry model. And right here we have the 30-minute break and tap of the AY level. So this is right here. This is your 30-minute break and 30-minute tap to take price up. That was a beautiful 57 pip move to the upside, which I took. I actually ended up getting out at a 1-to-1. Usually with the AYs, I aim for a 1-to-1 risk reward ratio. With the signals and the IBOs, I'll aim for a 1-to-2. But beautiful bounce off our key level, grabbing bullish liquidity from this yellow zone. So we built direction in terms of looking at this structure that we have in the market here coming up. Boom, 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 boom. Bullish market structure, bullish closures. So looking for bullish setups, building confluence with our key zones, bullish liquidity being grabbed, and then a beautiful 30-minute break and tap entry model. Moving forward to Tuesday, there was a couple of nice setups here on Tuesday. Where is that right here? Again, if we're looking at, just go back to here. Sorry. And we turn on the signal so you can see that. Nice. Yeah, nice. What happened here on Tuesday, we opened up and we retraced into the TF level, right? We see 1, 2, 3, 4 rejections off the TF zone. This is bearish, it's red, as you can see. So we're looking at sales once we bounce from this level during our trading window. So we already built bearish direction based on candle closures, market structure. We then built confluence with key levels being tapped, and also inside bar candles. We can see 6 IB here. This is a 6-hour inside bar, which we break right here and then pull back and then continue, meaning that there's potentially a high volume move coming into the market once we have inside bar candle closures. So this was the first setup with a 15-minute sell signal, as you can see right here, aligning with the direction, aligning with the confluence for a nice 1-to-2 move there for a 78 pip push to the downside. Then what happens? The 12-hour candle closes. We retrace, as we see right here. We got FF and TF, which is our key zones, as well as then gold grabbing bearish liquidity from the SLS, FLS levels. We can see right here, bearish liquidity being grabbed, bearish liquidity being grabbed. From there, we end up selling off. So we have bearish direction, we have bearish confluence with bearish liquidity being grabbed, as well as key levels being tapped into with the TF level right here. If you are not understanding or following along with any of this analysis, or the key zones like the liquidity or the TF zones or anything like that, it is fine. You will learn all about this in the DTG Academy. Do not stress. You will learn how to find liquidity, how to find these key levels where you're looking for price to retrace into and reject to give you confluence, right? And also you will learn how to find direction in the market every single day. So don't worry. I'm just showing you the setups that you can execute on once you understand the system. And there's a full 65 lesson course for you to understand the system, and also the entry models. And then once we grab bearish liquidity here once, twice, as well as retracing into these zones and rejecting, we get another 15-minute sell signal right here, giving us a 1-to-2 risk reward ratio for 160 pips. Again, you wouldn't worry about these buy signals, okay? Buy signals I'm not interested in because we have bearish market structure, bearish momentum, bearish direction, and bearish liquidity being grabbed in the market. So we wouldn't be looking at any buy positions right here. So the buy signals, invalid, not worried about those. So don't focus too much on that. This sell signal, we've already had the move right here, right? We execute on the first setup and we take that position. If that has hit a 1-to-2 risk reward ratio, you're not looking to take any more positions there. That is the move for that window. Okay. So that's a 1-to-2 for 160 pips. Moving on to the next day, the next setup. Here, again, you're getting sell signals, but at this point, we are not looking for sells because why? Look at the zone we're in right here. We're in this green zone, which means we're looking from buys from this zone, the DTF zone. Okay. And what also happens is here we have a 4-hour inside bar, as well as SLS, bullish liquidity being grabbed. Okay. So right here, we spike down, we grab that bullish liquidity, as well as tapping into this key zone right here, this bullish key zone, grab bullish liquidity, and then we move up and there is a DTG indicator 15-minute buy signal right here. As you can see, buy signal, and price pushes up there. Boom, hits a 1-to-2 risk reward ratio, and 97, 98 pips. Beautiful. Everything aligning here, following the system, right? Again, you wouldn't be taking this buy signal because this buy signal down here was the first setup that you should be getting in, and you get that 1-to-2 move for the 98 pips. So you're not looking to buy up here now, right? Because you've had the move already, right? Lots of bullish confluence in this trade, bullish retracement, bullish liquidity, bullish break of key levels with retests, and then a bullish 15-minute buy. So lots of bullish confluence within that day. Then we flip back bearish, and what happens here? We get again, during the new trading day, we get retracements into the DTF, right? A key level that we're looking for price to retrace into, we reject. There's also a 4-hour inside bar, which we grab liquidity from, and we start selling off. Now, there is a sell signal here, which does play out and gives you like a 57 pip move, or overall, you would have caught this whole move to the downside. But this is outside of our trading window, right? This is our trading window right here. We're not looking to take trades during like early Asian session, this is early Asian session. But what happens then? Our trading window opens. As you can see, this green highlighted area on the chart. We have lots of inside bar candles here. Now, inside bar candles, we have the 4-hour, we have the 6-hour, we have the 8-hour IB, right? 6 IB, 8 IB, 4 IB. This is indicating that there is a big potential high volume move to the down, or, whether it's the downside or the upside, but it indicates that there is potential volume, high volume coming into the market, because inside bar candles often represent or indicate consolidation, ranging markets, low volume markets. So when you do get that breakout, it's potentially going to be a big breakout, a high volume breakout, which is exactly what happens here. And the DTG system, the DTG indicator, correctly calls the move and gives you an opportunity to enter, as it always does, And right here during the first window, we have all our confluence. We have our direction, as you can see right here in the top right, bearish 4-hour daily, bearish direction. We have bearish confluence right here with rejection of our key zone, grabbing the 4 hour liquidity, the inside bar, lots of bearish confluence. And then we get the bearish setup with a 15-minute IBO. Now, this red level is your IBO, your intraday breakout level. And we get a 15-minute closure below there with a 15-minute closure and a break and tap below this key AY level. These levels are all plotted automatically by the indicator, so you don't have to worry about any of those. But you get a breakout right here. This is the other DTG indicator entry model, right? So we've seen all DTG indicator entry models being used within this week. We have a break and tap, that's one entry model. We have the signals, that's another entry model. And now we have an IBO, which is the third entry model. So we've used all entry models this week, and it just shows how diverse and adaptive the system and the indicator and the entry models are in order to give you entries however the market conditions are, right? We are consolidating now at this point with lots of inside bar candles, a lot of low volume, rangy, choppy markets. And then we get the breakout, and the DTG indicator calls that for us beautifully, right? With the bearish IBO right here. This one pushes down 130 pips, 137 pips, 1 to 2 risk reward ratio. Beautiful move right here during the first trading window. Then we continue, blah, 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 blah. This then is a losing trade or a break-even trade, right? There's different drawdown models that we have. We have 3 different drawdown models within the DTG system for when price hasn't gone your way. It's called DDM1, DDM2, or DDV. Drawdown model 1, drawdown model 2, drawdown variation. Now, there's lots of different ways that you could have lessened your risk in this trade. For example, when this bullish candle closes right here, and then you come back down to your entry, you either close full position, right? Or you close half position, depending on the entry model that you want to initiate at this point. That's up to you. If you just let this trade run, you would have had a full loss, which is fine, right? There's going to be losses. There's going to be wins and losses in trading. It happens, right? We've had lots of wins so far this week. So a loss is inevitable, right? If you initiated DDM2 or DDM1, you would have got out at break even here, or closed half your position at break even and then closed half here, right? So you were only taking really like less than half of a loss, like maybe a quarter of your initial risk. If you risked 1% here, maybe you lost 0.25% of your initial risk, right? Which is good. If you did DDM1 or DDM2, you would have had at least 0.5% loss, right? But you're managing risk within these trades, which is important. Moving on to the next day, which I believe is Friday. Yep, Friday we have another 1 to 2 risk reward ratio trade right here. Again, building, finding direction, which was bearish, building confluence, which we have right here. Retracement into the DTF zone, rejection of the key AY levels from the DTG indicator. Price pushing down during the first trading window. There was a 15-minute, I think I went a little bit too far here, a 15-minute sell signal, not that one. There we go, 15-minute sell signal here at the start of the first trading window. You can see the trading window right here. It started the green highlighted area. So lots of bearish confluence there, bearish momentum, bearish direction, and a bearish V5 signal for entry. And again, 1 to 2 risk reward ratio, 80 pips. And then moving on to the second trading window. Again, what happens here? We grab bearish liquidity from the FLS level right here. You can see liquidity, bearish liquidity grabbed, as well as retracing into the TF zone, into the mid-range of that zone as well, and then grabbing the bearish liquidity and then selling off. Beautiful. There is a 30-minute sell signal I believe, yeah, 30-minute sell signal right here. So you're seeing all different time frames being used, but in this instance, price comes up, and at this point, you'd be at break even. Of course, you are, over a 1 to 5 risk reward ratio in profit. You're like 92 pips in profit, almost pretty much at your take profit too. 1 to 1 risk reward ratio hit. So at that point, you would 100% be at break even. There's no way you are 92 pips into profit or 1 to 1.5 risk reward ratio into profit. Sorry, guys, and letting your trade then come up and hit your full stop loss. There's just no way, right? But then we retrace all the way back up into the DTF zone right here, and we start rejecting. No clear setups from there. There is buy signals, but of course, these zones are bearish. So you're looking for sells from these zones, not buys, right? So that is the week with the full analysis here uploaded into the Discord. Over 500 pips total profit, 6 wins, 1 loss, 1 break even. And if you are risking 1% of your account, last week you would have had a 10% gain. If you are risking 2% of your account per trade, you would have had around a 20% account gain. This is unreal results for 1 week, right? And that's just following the system, only taking the trades and the first setups that you see. As long as they align with the system, with the direction, with structure, with confluence, and then either taking signal, an IBO, or an AY, whichever one appears first after all your analysis has been met and triggered. And incredible results, man. If you guys want to, get a hold of this system and plug in, you can literally plug this system into your charts right now and complete the course and start taking these setups this week. Now is the time, right? Because look at what is going on in the world. Iran has just bombed. The US has just bombed Iran. The world is going crazy. So now is the time to get access to a solid system where you have complete structure and understanding and clarity of exactly what it is you're looking for at all times, no matter the market conditions. You can see right here throughout the week, Tuesday, Wednesday, the gold consolidated quite heavily right here, right? This is quite heavy consolidation here. But we still managed to catch 3 winning trades, 3 1 to 2 risk reward ratio trades right here throughout that consolidation, maybe even 4 if you include this one. So now's the time to get access to a solid system. Okay, plug it in, learn it, master it, start trading with us this week with DTG Academy. Okay, I appreciate you guys. If you have any questions, please let me know below. Also, the link to get access to the system will be below to join my Telegram, to join my Discord, whatever it is, the links will be below in this video. I appreciate you. I'll see you in the next video.